going to talk about how to strengthen the value chains. And what I think it's really interesting with both businesses is that they have quite a good overview of, in their each sectors, in the case of Dapo in the poultry sector, all the way from the production through the processing through actually the retail. So the view of the value chain as a whole, and how he's going to talk a little bit about how he sees as his business grow, where does he need to tweak what links of the chain they need to pay more attention to. And then likewise in the case of Tribanco, from the distribution side all the way to the retail, what's the role that Tribanco plays working with the retailers. So without further ado, I'll hand it over to, you want to go first, Cristine, or I think Cristine, we have to appreciate that she's got a little throat, a little cold here, and she made an effort to share her experiences. So, Cristine, please.
I think it's an IFC thing, because in Rio I was also with no voice, and now the only 2 times that I remember in the last years that I have no voice is at this event. So there's something going on. I think I get overexcited. I get overexcited and I talk too much the first day, and then the day that I have to present, I have no voice. I'll have to walk, sorry. I already spoke a little bit about Tribanco yesterday. Some of you were here yesterday, and some of you already know the model. So I'll try to be brief. And if you have questions, please either address it to me or to João Rabelo, Tribanco CEO, who's here as well. Can I? Oh, here it is. Nope. Yeah, here we go. So in one slide, Tribanco is a bank. It's part of the Martins Group. I'll present the Martins Group in the next slide. It's focused on micro, small, and medium retailers, especially focused on grocery, pharmacies, and construction stores. These are all individually owned mom-and-pop shops. So Tribanco and Grupo Martins don't own any of the stores here, okay? Tribanco itself started operations in 1990, but Martins, the distributor of goods, is going to turn 60 years by the end of this year. So it's a long time that it's been operating with the sector. Anyway, let's see the next one. Here's Martins Group. And the little story behind this, we have our founder, Mr. Alair Martins. He started as first a small mom-and-pop retailer. Very soon he realized that that was not the major contribution he could make, but the major contribution would be to try to get goods to other mom-and-pop shops, because they couldn't buy from industry, because they didn't have the cash flow, they didn't have the volumes, the sale volumes to buy from industry. And to buy from other intermediaries, it was very expensive. So what the first innovation he brought was to actually fractionate the boxes. So he would buy products from the industry and then make the boxes as each of the retailer wanted them or needed them, with only a sample of each of the products. And also he distributes everywhere in Brazil. So in all the cities in Brazil, there are over 5,500 cities in Brazil. We distribute in own fleet of trucks, goes everywhere and anywhere. Roads are a very big problem in Brazil. Some distribution is even done by boat. So it's a big operation. Very, very nice to me to get to know in more detail. After they started with the distribution part, they very soon found out that cash flow was the second biggest problem, and started the bank itself together almost at the same time. Also, the education process became very clear that these tiny entrepreneurs had very little idea of how to really manage their own business, how to get the stores to function and to sell more to the people in those communities that they were selling at. So the university, what we call university, it's not an official university with diplomas. It's a name, Universidade Martins do Varejo. It does education, capacity building through e-learning. There are over 300, almost 350 courses. It does renovation process, remodeling of the front of the store, of the lighting, of just general inside of the store, how to organize products, training at the stores, training for store owners, very different types of approaches. Also extremely interesting to learn about. Within Tribanco, I kind of moved this way, but let me go back to the financial side. Within Tribanco, we also have Tricard, which is another fascinating company. Tricard started making private label cards for these small stores. So we're talking a very small store in the middle of the countryside in Brazil having their own logo on their card, and they select the consumers who have these cards. Default very small, credit limits very small. I'm not sure if it's still 60 reais, the initial limit, but it was, which is $30, less than $30 a month for the initial credit limit. And for many of these people, it's the first credit card they'll have is this one, focused on the store. They can buy exclusively at the store. So it's, again, an amazing company. Within Tribanco, we also developed Tribanco Seguros, which is an insurance company focused on the store's employees, the store family, the store owner, and things like that. Still starting. Smart on this red, I don't know where the pointer is here, but oh, here. Smart is an association of stores that Martins takes care of. So it combines stores, store owners that become part of Smart, and Martins then offers some of the intelligence behind the store. So they offer the marketing, they offer more detailed and better purchase conditions to the stores. They're a little bigger than the tiny stores that we're talking about, but still small to medium size. And then there's also an institute down here, EMR, which is special focused on entrepreneurship in Brazil, which is Mr. Alair's big passion. So this is the type of client that we're talking about, a small store, lacking in management ability, lacking in access to technology of information, with small purchasing power, very limited credit options in some cases. And then they can get loans from Tribanco, either to buy merchandise from Martins or any other type of loans. We also have some partnerships with BNDES, which is the development bank in Brazil, to get specific funding for other stores, bigger store projects on that. They have very big difficulty to keep up with they don't think about, it's very hard for them to realize that they have to care about their own consumers' behavior and what they need. So some type of consumer tips, some type of how do you really put the goods inside your store and light, and how you illuminate your store, it gets very important. We had a project with IFC last year only on more efficient energy consumption, and light was a part of it. And there's one store that did a remodeling, and the owner says he didn't measure in detail, at least he didn't give us the numbers, but he says that after just changing all the lights, he thinks that he increased 20% his sales just because the store was nicer and brighter and people felt more like buying and like going in there. So here we're trying to show how each of the companies help with each of the main problems or opportunities that our clients have. So the university helps in many of them. Martins helps to bring the goods and to bring the university and to bring Smart, and then Tribanco with all the other financial side of it. Some things that I find different from the way Tribanco does business and helps the clients, these retailers, is the way we go to the stores. So the branches that we have, they're not branches to receive customers at. They're branches just as offices. So our bankers, they go to the client. So the client doesn't have to leave the store to be in line at a bank at whatever business banking hours in Brazil are, from 10 to 3, which is ridiculous. So they can have better access that way. They can call their banker on the cell phone and ask for a visit. And we keep just communicating with them about other issues as well. Consumers here, when I talk about consumers, they are the owners of the credit cards, the private label credit cards. So they are the clients of our clients. They are our clients just with the credit card, okay? There are a lot of communication efforts with these people, sustainability issues, little gift things related to the card that are really interesting. This picture here was a drawing of like I can't remember, I think every 20 reais, so $10, less than $10, they would buy at the store, you would get a number, and then there would be a drawing. This lady here got a TV. And something that I find extremely innovative is the training that we give to the sales force. So they're not just bankers. They have to be able to walk within the store and see what type of tips, what they could help that store owner on the spot to make it better right there. So how we recommend it, is it perfect? No, and of course not. None of our companies are perfect, but they are trained to do that. So they're trained before to go there and talk about credit, to walk around this store, see how the store is set, see if they can change product settings, if they can give tips considering fire safety. So if the fire extinguisher is there, but there are tons of boxes on front of it, you should say something about it and call attention to that point to the store owner. That is not a typical banker role. It's not easy to get bankers to understand that and to understand that they're a part of a bigger mission that is to develop this small retailer and not only to fulfill the goal, the monthly goal of lending money. These are some of the courses of Formar. I showed this slide yesterday. Not sure if, well, there are a few people that were not. So there are the numbers of courses that we have per section or per topic. So we have 19 on finance, 72 on suppliers, and so it goes. Human resources, 39. We have, which is not specifically cited here, but we have 9 courses on sustainability, which are mandatory to our employees and available to all the clients. These courses are available to the clients for free, and the clients can also give access to their families, to their employees. There are a few success cases, extreme success cases, when the store owner has computers within the store and trains the employees right there, and he gets reports on the courses they took, the score they took, the time they were there taking those courses. So it's a very powerful tool, and we don't use as much as we should this tool. We need to use it more and more. This was a work that we did with IFC as well about job creation, and there were some issues that came up from that study. It was just recent, so that's why I'm bringing it here. 94% of the interviewed clients say that Tribanco is a bank that invests in the retail segment in Brazil. 88% said they could make a difference. And I used could there because 88 is a very big number. And if I just say it makes a difference already, we don't feel that challenged. So we need to make a much greater difference than we are making right now, and that's the goal. 46% say that the biggest help that any type of partner or supplier could give them our courses, information, more knowledge about their own business. We have a powerful tool to do this, or we have many powerful tools to do this. Martins also has a magazine that's called Vitrine do Varejo, and it's already available for Android tablets. We do send paper issues to 40,000 retailers, but still Martins has a lot more than that. Tribanco has 40,000 clients, but Martins has a database of close to 1 million, so it's still a lot to do. 87, the downside of all this, 87% say that supplier employees that go to their stores don't really help in their development. And here we're talking about everybody. So we're talking about industry who sends people there to help selling their product, to help putting their products on the shelves. It's a common practice there. About 2/3 of the stores get, in different timings, an industry employee that goes there to do that type of job. So they say that those people are actually just doing the work for the industry side and not to help them to develop, which could be something very interesting to do, to train those people to say, you know, tips, things that are very easy to see. It could make a difference to that person, to that retailer. Takeaway messages from all this. Sim, I didn't state here, sim is, first of all, it's yes in Portuguese. So it's a nice juggle of words and acronyms. It's also Sistema Integrado Martins, or Martins Integrated System. So it's the combination of all those companies that I described in the beginning. SIM uses an inclusive or a complete, a broad range model of solutions to really get to this clients that we are calling here base of the pyramid, but we are not talking about the base of the pyramid that we were talking before, of people who make this $2, $3 a day, okay? But this is still people, store owners, about like in gross numbers, the 70% of our clients do not make $100,000 per month in sales. That's not profit. Okay, so in actually how much they sell at the stores. So they are what we would call a bottom of the pyramid in retail stores in Brazil. What else? We really, really do. Oh, one thing, the middle point here is one of my biggest ones. This is why, in my opinion, Mr. Alair was so successful, is because he really developed a win-win situation. He developed a mission where to make the small retailer grow would make himself grow. And this alignment with the mission, I found this quote from IBM's founder. And we talked a little bit about trust earlier today. The toughest thing about the power of trust is that it's very difficult to build and very easy to destroy. The essence of trust building is to emphasize the similarities between you and the customer. And when I read this was Mr. Alair. He is a small retailer until today. Today he's not a small retailer anymore, but in his heart he is. In the way he looks at you, he builds trust. There are clients that have his picture besides their wedding picture in their dining room. So it's about mission and about trust, and that's the business. And all of these companies that we talked about are profitable. Well, the university is not a company made to be profitable, but it serves the mission and the whole of the scene purpose. But it's a business, and it's totally related to mission and to trust. That's it.
Thank you, Cristine, and thanks especially for, making the extra effort given your.
I'm fine, thank you.
Well, thank you, Dapo. The floor is yours.
Right. It's the graveyard shift. Okay. Just a quick overview of what Food Concept does, and then we'll take it down to the inclusive business side. Where the business is integrated. It has the QSR, the quick service restaurant side. We have a property division. We have fine dining, Reeds, and then we have the Butterfield Bakery, as well as trading and logistics, as well as free range farms, which is the poultry business. Chicken Republic is a flagship brand, and it was launched in 2004 with 65 stores today in Nigeria and Ghana. We have 62 of those stores in Nigeria, with Ghana 3. We should have the 4th one open by the end of this month in Ghana, and the plan is to grow it to 300 stores by 2016. 20% of our stores are owned by franchisees, and 80% of those franchisees are women. Today, Chicken Republic, and well, the group in general has over 1,200 employees all over the country. Nigeria, of course, has a market size in excess of 160 million people. Low per capita consumption of poultry compared to the rest of the continent is about just 1.5 kilos, compared to an average of, 7 kilos in the rest of Sub-Saharan Africa, excluding South Africa. So this gives us the opportunity in the poultry space. And the estimate is that on an annual basis, the gap in the poultry space is worth about $2.5 billion. On the bread side, there's low market penetration of formal bakeries. We have small bakeries all over the place, but Food Concepts, using its Butterfield brand, is the first national loaf, because we have 9 bakeries scattered all over the country. In 2009, the group decided to do a bit of backward integration by building a poultry farm, because the front end required these products. Currently, the farm employs over 300 staff, 60% of which are women. We decided to go with controlled houses because it gives us the yield. It's more expensive to build, but it gives us the yield, low mortality. In fact, we're getting better numbers in terms of performance than even the people supplying us with day-old chicks. Oops, sorry. Now, in the poultry business, we are very clear. We need the people at the bottom of the pyramid to make the poultry business successful, because it's such a capital-intensive business. Today, we have registered about 75 outgrowers. The benefit they get is that we negotiate feed and day-old chick supplies on their behalf. We give them extension services so that they can get the same types of yields that we are getting, because that's very important. We ensure that they have an offtake, so they can raise money from micro credits, micro banks, and even the normal commercial banks once the offtake agreement is in place. And we work with distributors to market our products so that at least the offtake is as good as it says on paper. With this model, outgrowers are able to grow more flocks per year, because the challenge for most small farmers is that they are unable to find people to take their entire flock when those flocks mature. So usually what happens is you find someone with 5,000 birds, and someone comes along and takes 200 today or 500 tomorrow, but he still has to keep on feeding the birds, and that eats into his margin. So by teaming up with a big producer like ourselves, we can take the entire flock in one day, and then that means they can stock the houses more times per year than they otherwise would. Our target is to source 40% of our birds by the end of 2014 from our growers, and we believe, based on today's numbers, that will save us $10 million in capex that we would have had to spend in building houses to grow 400,000 birds. So for us, it's a strategy that we're pursuing quite aggressively. Now, there are risks in working with outgrowers. There's a risk of diversion, and those are some of the mitigants that we're putting in place. Contracts. We also make it attractive to them that they can make more money by growing more cycles per year. The plan is to also eventually give them revolving credit so that they can do more, supply them with inputs, and then of course the extension officers that ensures that they get the best practice that gives them the yields. There's a risk of diversion. The biggest mitigant to that is to ensure that you give them market price. We don't want to take advantage of the farmers. We want to ensure that they earn what they deserve. And then there's the risk of poor performance, but we believe that with the extension services that we're putting in place, that is actually a very minimal risk. On the bakery side, Butterfield was launched in 2003. The model is plant bakeries. Now we have 9 bakeries in 8 Nigerian states. So in actual fact, this is the only bread brand that is national in Nigeria today. The way inclusive business is being used in the bakery side is mostly in the distribution framework. Unlike some of the other presenters, we have decided not to control 100% of our distribution. So we control about 35% of distribution. The remaining 65% is with other people, and most of these people are those in the bottom of the pyramid. And the way they benefit, all 2,000 of them, is usually from sales training. So we teach them how to, the difference between our bread and competition. We give them 24-hour credit. With this credit, they are able to take a certain quantity of loaves, pay for half of it, and then they get the balance on credit. And they also get marketing collateral such as danglers and umbrellas that display the brand so that consumers can know where to get the product. And then they get assistance with deposits for distribution vans, as well as some money to pay the rent for their depots. And this has been a very inspiring part of the business because we've seen it transform lives. There's a story of a widow who was able to send all her children to university just from this credit line that we've provided. Overall, the challenges, same thing that has been presented by other speakers. Funding remains a major one. Most of the people that we deal with lack managerial skills, so training is one of the major ways that we're trying to reduce that. Product quality, especially if you find a farmer that is trying to cut corners, but hopefully the extension services that we're putting in place will help to pick that up very quickly. And then infrastructure, which is a major challenge in terms of evacuating products to the major marketing centers. It remains a big one. And the way that we're planning to overcome these challenges include working with institutions such as the IFC to provide better funding, developing training programs, trying to encourage government investments. We're very active in the government space. The government in Nigeria at the moment is very interested in agric, so we're engaging them on that. And then, of course, investments are required in new technology. Most of the farmers that we work with use open houses versus the controlled houses that we are using. So therefore, their stocking density is much smaller, but if properly managed, it can still give them reasonable yields. And that's it.
Thank you, Dapo. I think in the interest of time, I will go straight to the audience for questions, better than me standing up here and asking. So if anybody has any questions for Dapo or for Cristine, now is the time.
I have a question for Tribanco. Roland Michelic, I am responsible for results measurement and now for actually job creation within IFC. To what extent are your stores like just owners and their families, or do they also have employees? And presumably the larger ones, the Smart and so on, do have employees. And do you actually look at the growth of these stores and see to what extent you might also be able to provide other services, for example, to their employees?
Thank you. Yes, they do have other employees. We just conducted a job survey together with IFC. I'm sure that you will get those numbers. I just didn't finish yet writing the report, so that's totally my fault. But they start, like most of the stores, they start just with the owner or with the owner and its wife. And after between 5 and 10 years, they grow, most of them, to about 4 to 6 employees. So they do have people employed. Half of them are not employed with all the documentation, but they're still employed. Oh, did I answer all your questions?
It's just a quick observation, which is the difficulty of doing business in so many countries where the company actually has to develop their value chain, like in the case of Food Concepts, where you can't get enough chicken. So you have to go out and produce chicken. When Tribanco was first created, they actually bought all the trucks because there is no transportation. They still own trucks. So I think that even though Nigeria is a big country and is up and coming, Brazil is a middle-income country, that when you're trying to integrate the whole economy, there's so many challenges and the other countries you don't have those hardships. So I think that's why it's such an interesting, experience. Different sectors, and yet you have to go source for a Food Concept, and for Tribanco you have to distribute, you have to finance the customers of your clients. So, and I think in some aspect Food Concepts may eventually have to finance some of the outgrowers, some of the retailers. So I think that's why it's interesting to have you both on the same panel. Thanks.
Thanks, Eric. Let me just make one comment on that. Besides the trucks and things that you can easily see, knowledge, like for the capacity building, there is really no good source of knowledge for the small retail in Brazil. There are very few points of knowledge here and there. So that's one of the main reasons that the university was created, to really try to combine all this knowledge and from all these people that are there at the clients, visiting them, from the truck driver to the Martins salesperson, to Tribanco salesperson. There's so many people who visit the same client that you need to get all that knowledge, and we need to do a better job at really managing all this. Thank you.
Please.
I have a question, I'm sorry, not to the panel, but more to Toshi and Eriko. See, we saw in this presentation also, Adedapo mentioned that the chain which is there, it is difficult to arrange funding for them, and the cost of funding is very high. And that's of course one key element of his growth as a business model. Same way for us also, the network that we have requires money for a different reason. Very broadly, because we handle money on behalf of banks. So the expectation is that whatever cash they handle will be provided by them like a prepaid basis. So the cash risk in a way is owned by the retailers. But the way the market is, the retailer is also a poor person. And many a times they are not able to provide the balance or the money in line with the business which they are supposed to do. So it creates in a way a mismatch. So either we are not able to grow, or we end up carrying a financial risk or a cash risk far higher than what we would want to in line with the business. And yesterday we did discuss, can IFC come in with different instruments, not purely a plain equity and all. What is the formal view internally, or what's happening in that, right? One very simple thing seems to me to be here, like traditionally banks do a line of credit for the distribution chain. Is that something that we can create jointly with IFC because it seems to be like a common requirement. The chain itself requires some amount of funding. And of course, there is a business model which works for them. So I don't know if this is already being done something or it exists or, you know.
Yeah, no, that's a very, very good question. Actually, the first loan we did with Tribanco was $10 million, and it was for them to have the ability to continue doing what they were doing well, which is lending to small mom and pop shops. But we took Tribanco's credit because they were comfortable with the credit worthiness of the retailers. Imagine that you have Martins, it's a distributor. They have like 1 million customers. And 40,000 of those customers are Tribanco's actual clients. That's because those are the loyal customers of Martins, where they have a history of buying. They may not have a credit history, but you can tell which are the ones that have bought and that have grown. So this is about information. So Tribanco, even when it was created, was looking at Martins' clients and which of these small mom and pop shops had grown, which ones were paying on time, because Martins as a distributor was giving 30, 60-day credit before. But the beauty of this model is about knowledge, and then getting the knowledge from the distributor to the bank. And Tribanco is a branchless bank when that word didn't exist. They only have a couple of offices, the headquarters, the São Paulo office. Everything is done electronically by phone, and the people from Martins, Tribanco, Tricard, they visit their clients. So there's no need to have a bank. The whole model is interesting because it uses knowledge from one area, the original distributor, then to the bank, and then the bank knows the retail customers well. The retailer mom and shop knows its own individual customers, and that's how they do the card. So again, it's information. And nowhere in there did Tribanco ever ask us for a subsidized line of credit. It was a regular commercial activity. And I understand that there are other situations where you may need some subsidies, but it should be for the training, or it should be for, getting into the market. But here we're talking about a distributor that has been around for 60 years and a bank that's been around for more than 20-something years. So I think it's a difference in the life cycle of the model of the business. When we were talking with Tribanco 10 years ago, they were not looking for anything that it was not a commercial loan. And it was the difficulty for us was to explain to our credit committee that this is really a credit line, and it was something for the bank, but in fact, most of these clients were also clients of the distributor. And to explain how is a specialized entity knows about these retailers and why the credit risk is so much smaller than if you were just lending to a bank that was lending to the retail SME sector. So that's, I think, the distinction.
Yeah. So see, two things based on what you're saying. One is, we, and I'm sure many of the other entities here, are actually distributors. They are not banks. So while we may be comfortable with the credit risk, by the very nature, so two kind of things. One, regulation itself may not allow us to lend because lending is something which a distribution company is not supposed to do. Second, our shareholders or stakeholders, they will not allow us to lend because, in a way, they did not invest in a lending company. They invested in a distribution company, which is running a business. So in that scenario, can we create something? If the risk remains the same, wherein the line of credit is like a pass-through. Because lending on the books, for sure, is a possibility. But then, on lending may not be permitted for various reasons.
We should discuss this offline. We're tying up all these people's time.
No,
but what I'm saying is Martins was a distributor, and they created a bank, so they could finance. So let's talk about it. Obviously, there is a solution, okay?
Yeah, and hopefully useful for all.
Yeah. No, I think that that's why we're here.
Right.
To try to figure out how to solve your problem. Maybe
Right.
you have to either create a bank or you have to tie up with a bank because those are the people who in your country can on land. So we'll discuss later, but it's a very good, this is a kind of conversation we should all be having. So thank you.
Eriko, can I give an operational type of example? With our clients, if the client doesn't pay Martins back, it's blocked to do operations with Tribanco. And if they don't pay Tribanco, they also are blocked from buying at Martins. So we do transfer that type of information. We don't transfer amounts or we do all the legal banking procedures, so we don't transfer banking information which is privileged, but we do give like red flags. These clients are blocked.
Thank you. I'd just like to thank you both, and by saying also that, acknowledging that the footprint of your specific business models, as Eriko said, encompasses the whole range of the value chain, and we're talking about the value chain. So we really recognize as IFC the impact that you have as businesses in your specific markets is huge, and it's and for us, for our objectives, we value that very much. Finalize with the last example for Dapo to think of. Specifically, we conducted a very specific study on jobs, the impact on jobs of IFC venture capital investments, and we saw the higher multiplier effects in retail, specific food retail. So I think it'll be interesting for us at some point to discuss, and try to measure the experience with the Chicken Republic specifically.
Sure.
So I thank you very much, Cristine and Dapo, for your participation.
Thank you very much.